Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at MarketSite is Ryan Taylor. He's the CEO of Dashcore. We're going to focus on cryptocurrency for mobile payments and reward programs, everyone's favorite topic. Thank you so much, Ryan, for joining us at MarketSite. Now, it's interesting because prior to Dashcore, you were at a large hedge fund in the city analyzing the global payments industry. Do you think digital currency is going to ever take over legacy payment processing?
Well, I think it's a little ambitious to think that digital currency will take over anything. What we see in the payment space is new payments technologies come out and they get adopted. The legacy payment technologies never truly go away. They kind of steal share from each other and serve different purposes. And so we still see massive use of checks at places like grocery stores. And it's really a generational change that needs to take place within the payments industry before new payment technologies truly get adopted.
All right, well, let's talk about what happened last week. Starbucks announced a new joint venture called Backed. I think that was, the headlines went crazy after that came out because it's aiming to create a seamless global network that for spending digital assets. But then they came back and clarified that it's an exchange for converting crypto into dollars that can be used at Starbucks. So it's a big difference, but could that be a catalyst for mass adoption when you start hearing places like Starbucks talking about crypto?
Well, I think the impetus for them coming back is to clarify to their shareholders that no, we're not going to start becoming a speculator in cryptocurrencies and accepting those onto our balance sheet. But ultimately, if you're able to convert at the point of sale into US dollars and spend them, as far as the user experience goes, yes, it's the same thing as being able to, quote, spend your cryptocurrency. And so I do think that a daily use case like buying your coffee is something that can be a catalyst. Things like buying your coffee or using public transit is something you do every day and becomes a part of a habit. And it's that habit-forming process that really allows a new payment technology to be adopted.
All right, well, tell us what you have going on at Dash in terms of e-commerce and payments, because you're doing some pretty cool things around the world.
Yeah, we have a lot of different projects going on. Probably the most noteworthy is happening in Venezuela, where there's really been a grassroots effort to adopt Dash. And we have several organizations on the ground that are doing things like customer onboarding, merchant onboarding. They have a call center down there for customers to be able to call in. And what we've seen is over 800 merchants since the beginning of the year have signed up to accept Dash in Venezuela, mostly in the capital city of Caracas. It is becoming a very viable payment method for people in their everyday lives. And you can spend it at stores, restaurants, bars. It's becoming ubiquitous within the country. And we're seeing other areas, geographic areas and industries that we're targeting that we're getting real penetration in.
All right, well, why do you think developing nations are adopting the technology faster than ours, for example?
Well, I think our own payment methods work pretty well here, and we enjoy a great deal of financial freedom. There's a lot less incentive for Western countries to try to adopt this. Developing nations, in contrast, in Venezuela, they're projecting 1,000,000% inflation this year. Their own currency is effectively broken, and that breaks every single payment method that's there. When you're accepting a credit card and 3 days later when the payment hits your account as a merchant, you've already lost a large portion of the value of that transaction. And so what we're offering is a better solution. Our transactions are instant, so they're viable at the point of sale, unlike a lot of other cryptocurrencies that take 10 minutes to an hour. You can't stand around in a store for an hour waiting for your transaction to go through.
Right.
So I think we're just well positioned to be able to address the specific needs in that country. In other countries like Venezuela or like Zimbabwe, where we're seeing adoption, it's a different story. There's a shortage of physical cash there. And they do have a history of high inflation rate within the country. So those areas are just more amenable to alternatives. And so I think that's the reason why we're seeing it get adopted overseas first, beyond speculation, but as actual use.
All right, now you've partnered with rewards.com for users to earn cash back in Dash. How does that work?
Well, it's a very simple process. For users that are signed up for the platform, there are different cash out options. They can do a bank transfer, they can do it through PayPal, or they can select Dash. If they select Dash, they simply enter their Dash address. At the end of the month, when their rewards are calculated and sent out, the company just sends them cryptocurrency. It's a great way to get in without having to set up new accounts and having to, with an exchange, for example, and allows you to get into the ecosystem and start earning Dash. You can also spend your Dash on the platform. Some merchants on the platform, like cheapair.com, accept Dash as a form of payment, so you can actually use that to then purchase flights, purchase hotel rooms, and things of that nature. And ultimately, in the fall, they're going to be adding Dash as a payment option. Any of the 7,000 merchants that they have that have a digital gift card program, you'll be able to buy a digital gift card at a discount using Dash and then spend it with the retailer. And so real benefit to the consumer.
It seems for Western countries like the US that the rewards portion of it is seeing better adoption rates.
That's right.
Like, right?
Yeah, I mean, one of the problems with Bitcoin and other cryptocurrencies is the sender is responsible for the transaction fee. Well, that's actually a disincentive for me to use it. With credit cards, I earn points, and the merchant pays those fees. And so we're kind of looking for ways to flip that around. There's benefit here for the merchants. They're ultimately getting transactions that can't be charged back. They're paying a lower fee for them, and if they just pass some of that savings along to the customer, they can incentivize them to actually use this and get benefit. Ultimately, in certain categories like online travel, chargeback rates are huge.
Right.
And so you know, the merchant ultimately pays those fees, and they're passed on to the customer.
All right. Well, thanks very much, Ryan, for joining us at MarketSite, and thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.